Have you ever wondered why American banks make massive profits, while Indian banks, despite serving a huge population, earn much less? The United States has far fewer people than India, yet banks like JP Morgan, Bank of America, and Wells Fargo earn many times more than even India's largest banks. So the real question is, why do US banks earn more money than Indian banks? Is it because of higher interest rates, better customers, or a completely different banking system? Let's break it down, point by point, with real logic and examples. One, income per customer is much higher in the USA. The average American earns far more than the average Indian. Average US per capita income, $75,000 plus average Indian per capita income, $2,500 to $3,000. Because of this, US customers borrow bigger loans, use credit cards heavily, pay higher interest and fees. Banks earn money per customer, not per population size. 2. Credit card and consumer debt culture. In the USA, credit cards are used for daily expenses. Interest rates on credit cards range from 18% to 30%. Late fees, annual fees, and penalty charges are common. In India, credit card usage is limited. RBI tightly regulates charges. Defaults lead to waivers and restructuring. US banks earn massive interest from consumer debt alone. 3. Less government interference in US banks. Indian banks, especially PSU banks, face government-directed lending, farm loan waivers, political pressure, social welfare obligations. US banks operate purely on profitability, can reject risky borrowers freely, no forced loan waivers. Freedom equals higher profits. 4. Lower NPAs, bad loans in the USA. Indian banks suffer from corporate defaults, delayed legal recovery, high non-performing assets (NPAs). US banks use strong credit scoring models, fast legal recovery, early detection of bad loans. Lower NPAs mean higher retained profits. 5. Investment banking is a goldmine in the USA. US banks earn heavily from investment banking, IPO underwriting, mergers and acquisitions, derivatives trading, asset management. Indian banks mostly depend on interest income, limited exposure to global capital markets. Non-interest income is the biggest advantage of US banks. 6. Advanced technology and automation. US banks use AI-based credit scoring, automated compliance, low branch dependency, lower employee cost per transaction. Indian banks, large workforce, heavy branch network, high operational cost. Technology improves margins significantly. 7. Strong legal and bankruptcy system. In the USA, bankruptcy laws are fast and effective. Banks recover money quickly. Defaulters face serious consequences. In India, legal cases drag for years. Recovery is uncertain. Banks lose time and money. Time is money, and US banks save both. 8. Dollar dominance and global advantage. US banks benefit from dollar being the global reserve currency, international trade financing, cross-border transactions, global presence. Indian banks, mostly domestic operations, limited global influence. Global reach equals global profits. 9. Better risk pricing in the USA. US banks price loans based on risk, credit score, market conditions. Indian banks often follow fixed or capped rates. Social lending priorities. Accurate risk pricing equals higher returns. So the reason US banks earn more than Indian banks is not population. It's because of higher income customers, strong credit culture, less political interference, lower NPAs, massive non-interest income, advanced technology, strong legal system, global dominance. Indian banks are improving fast, but the business environment is very different. If you found this video informative, like the video, subscribe for more finance insights. Comment if you want a comparison between Indian PSU versus private banks. Because here, money speaks, but knowledge speaks louder.